please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Very good morning. Welcome to Chartbusters. Well, this is the show where we'll highlight a whole host of buzzing stocks. We'll also get you a view on how you trade the markets. For the time being, the Nifty is holding in the green this morning, but ICICI Bank, that's the culprit. And with that, are down close to around 6%. It's encouraging to see they were at least holding in the green, Mangalam.
Absolutely. There you said it. In fact, the contribution chart should come up for you. Had it not been for ICICI Bank, the Nifty would have been higher by another 30 points. Yes. That's the drag that ICICI Bank is causing on the Nifty, and the Nifty Bank, on which ICICI Bank has around 17% weight, that one should come up for you too as well. That would have been a shade in the green, in fact, had it not been for ICICI Bank, dragging the Nifty Bank down by about 240 points as against the Nifty Bank cut of 120 points. So ICICI Bank, safe to say, is the key culprit in today's trading session. First up, all the top stories that we're tracking at this point in time, and it is ICICI Bank. Tanks the most in 2 years, as sources tell CNBC TV18, CNN News 18 that CBI has started a preliminary probe into the dealings between the Videocon group and Deepak Kochchar, the husband of ICICI Bank CEO Chanda Kochchar.
And Canfin Homes cracks in trade as Canara Bank calls off its plans to divest the entire stake. The management tells CNBC TV18 that the bids received were not in the tune with the valuations that they were seeking.
FY18 ends on a good note for automakers, with the sales for the month of March rising above estimates for most of the pack. Maruti reports the highest sales since September 2017. Commercial vehicle sales for Tata Motors grows 37%. Meanwhile, Bajaj Auto reports lower than estimated March sales, as 26,000 of their export units were in transit and not recorded.
And Videocon surges in trade after BofA ML initiates coverage on the stock with a target price of 1,244 rupees per share. The global brokerage cites 2.5 times its order book potential as the key reason for them to be bullish.
New listings on Dalal Street on day one of FY19. Sandhar Tech lists at a 4% premium to its issue price of 332 at day's high. Karda Construction debuts at a discount of 24% versus the issue price of 180.
Well, we've had a long weekend and we've missed Ashwini Gujral's call. So this Monday morning, well, we're getting his call on the Nifty. Hi, Ashwini. Good morning. Nifty holding in the green, but with a gain of only around 35 points. Is this short-lived? Do you expect us to come off from these levels?
See, the Nifty is quite range-bound, and 10,100, 10,200 remains that range. My sense is that since we had a fairly negative expiry, this is probably, just first day buoyancy that we can see. I think the bigger problem lies in the Bank Nifty, and which is also kind of a bit hidden because of this, bad expiry and first day of a new expiry, etc. I would think at some point the cookie will crumble one way or the other. Either Nifty goes above 10,200 and pulls the Bank Nifty along with it, or Bank Nifty clearly goes below, say, 24,150, 200, and hence pulls the Nifty along with that on the downside. My sense is the latter can happen. So while on the Nifty, I'm neutral, you can probably do some individual stocks on the upside. I think the negativity on Bank Nifty is fairly pronounced, and it should decline in the days to come. So with a stop, say, closer to today's high, it's still a decent time to take shorts on the Bank Nifty. Having said that, individual stocks, PC Jeweler is a sell with a stop of 325, target of 300. Jet Airways is a sell with a stop of 604, target of 580. And Mindtree is a buy with a stop of 798, target of 820.
All right, Ashwini, thanks a lot for that. We'll keep coming back to you all through the remaining course of today's trading session and all of FY19 as well. Just keep an eye out on Tata Coffee. 0.8% equity changed hands on that counter. A lot of the Tata Group stocks are seeing equities changing. Will be an important disclosure to watch out for today. But the stock on our radar right now is Canara Bank. That one's called off the divestment process of their entire stake in Canfin Homes, as the bids that were received were not in tune with the valuation. So we spoke with Canara Bank earlier. Now we have Canfin Homes, the management, the MD of Canfin Homes, Mr. S.K. Hota, joins us on the phone line. Mr. Hota, over the last couple of years, there have been 2 attempts at selling stake in Canfin Homes by your parent. The company, I believe, would have been, affected by this impending stake sale. Now that this is off, do you think business will grow well? Because the last 6 quarters, your loan growth has been on a declining trend.
Yeah, good morning. I don't associate the Canfin's business with all those. I will say that yes, certainly in the recent past, the growth of the industry as a whole, housing finance industry as a whole, was impacted partially or to some extent by the demo, RERA, GST. All those things are behind now. So I presume that the pain period is behind us. Today we are starting the new financial year, first working day of the new financial year. I look at everything as pretty positive, really, because now the positive impact of RERA, that in terms of the much-needed comfort for the genuine home buyers, first-time home buyers, the CLSS, that will be the major key driver for FY19 growth.
Mr. Hota, you're sounding quite positive, so that's good news. What my colleague Mangala meant was that, most of the management bandwidth was engaged in this entire stake sale process. Now, if you're saying that things are looking positive, give us some numbers, sir. What kind of a loan growth are we looking at? What kind of disbursements we're looking at? If FY19 is going to look up, you must be having some targets in mind, because now the focus is going to be on operations, isn't it?
Yeah, Canfin was never involved in the process.
Right.
Neither the Canfin management was involved.
Right.
So that way business is as usual for Canfin. And one more thing I will tell that, yes, going forward, as far as last year's numbers are concerned, you may have to wait for just few weeks. That will be coming out with our Q1 numbers, with our Q4 numbers. But as far as the outlook for FY19 for the industry is concerned, I am pretty positive.
Positive, sir. Some numbers. If you could help us with some numbers. So as you're saying, you all were never involved in the process. Now the key focus, now the street wants to evaluate Canfin Homes. That entire stake sale trigger, that's been put on hold for some time. So what kind of numbers, sir, you are working with? And you would know the company the best. So, if you could give us your analysis of what kind of a valuation would you be looking at? I mean, if you have to value Canfin Homes.
I'll prefer to always
let's skip the valuations,
because valuations are made by the market.
Okay, so
I don't look at those numbers.
Mr. Hota,
I look at the fundamentals of the company.
All right, so we'll skip the valuation part. Tell us about the fundamentals of the company. How are you seeing it?
Yeah, Canfin always has been it's a very good franchise, really, and built over last 3 decades. We are one of the senior players as far as the market is concerned. And we operate in that particularly LIG and lower MIG band of housing loan customers. And primarily into salaried space. So that being the situation, this is a sweet spot that going forward, FY19, always I stick on to my stand that if housing for all by 2022 has to be a reality, then FY19 has to be the take-off phase and FY20 has to be the peak.
Mr. Hota, then before we let you go, just 2 answers if you could give to us. The first one, this morning we spoke with Canara Bank, your parent. They said they are looking to strengthen Canfin Homes going forward. So some more capital required for growth going forward. And secondly, how's the employee morale after this deal was called off? There was that deal which was impending. How are you judging the employee morale now?
They are all jubilant because it's a 3-decade-old franchisee of Canara Bank. So certainly the people here.
I'm glad they're jubilant. So are you getting more money from Canara Bank now, because they said they are looking to strengthen your company going forward?
The relationship has never been like that, really. It has been that, yes, Canfin enjoys a very strong capital adequacy of almost 19.25%, and even the Tier 1 itself is almost 17%. So going forward, the Canfin has been grown that way by the parent as an independent entity without any intervention from bank side or Canara Bank involving in the day-to-day affairs.
Okay, all right, Mr. Hota. Thanks so much for joining in.
Keep an eye out on Infosys. That one is at the low point of the day. Remember, the company reports its 4th quarter numbers next week. So we'll watch out for the IT stocks. They've been outperforming from the start of this year. Infosys and IOC, petrol prices at 4-year high. Oil marketing companies are at the low point of today's trading session. But let's talk about stocks which are gaining today. We have GNFC, which is gaining today. Our very own Nigel, you traveled to GNFC City in Gujarat this weekend, caught up with the management of GNFC. Here's a slice of that conversation. And the management gives us a lot of details. Perhaps that explains the move on the stock today.
TDI prices have been stable. And they have been hovering in the range of about $4,200 to $4,500 during the last 3 months. But more importantly, the demand has been picking up. There have been more and more export inquiries with us. And very especially, a very new trend we have observed, that countries from Africa, they have been demanding more and more TDI. So we are exporting to all continents. Now this wasn't there. From an export of 6 countries, we are now exporting to 66 countries. And from an export in terms of value about 10 and 12 crores, we hopefully are expecting to achieve almost 600 crores.
Right.
But more importantly than the price, the demand trend has been very, very positive and very significant.
What was the total debt in the books? What was the working capital? And what has it come down to?
Well, when I joined this company, the sun used to rise and set and used to take away about 1.5 crore per day by way of interest. From that level of almost 4,000 crores, we are a debt-free company as far as the long-term debt is concerned at the end of 31st March 2018. Working capital utilization used to be over 1,700 crores, and that has come below 300 crores. So from that level of debt of almost 4,000 crores, the company is now practically debt-free.
What is GNFC going to do with the cash they're going to generate?
See, as far as dividend is concerned, it is for the board to decide. We are doing well. So the board may take a call on that, and we're going to have the board meeting in a couple of weeks from now. But as far as the company's growth is concerned, we would definitely like to consider a few options of growing in certain known areas. We would not like to go into unknown territories. We're very strong in acetic acid, we are very strong in formic acid, we are very strong in weak nitric acid and concentrated nitric acid.
But is there a possibility, sir, that shareholders could be expecting a bigger dividend payout? Could there be some value return to shareholders?
Well, again, we are a listed company, we're a government company, so I would not like to comment on that. But definitely, our board has full authority to consider that. And since we are doing very well, board might take a call.
For the next year, the street wants to understand, is a 45-50 rupees EPS possible, given that now you're saying that you're virtually debt-free?
Well, first thing, I would like to comment that how much of EPS we'll end up with is still not certain, but we are doing very well and we should do better, definitely.
You're mentioning formic acid. You know, reports suggest that maybe RCF, one of their units was not functioning. Maybe there's a possibility that they go and sell out. Will GNFC be interested in that particular unit? Is that a possibility?
Well, it is not only a possibility, we have asked them many a times to take over their formic acid plant. Now they have to take a call. Since we are the largest player in formic acid, and since their formic acid plant has been closed for long periods, and they have not been doing very well, their operational costs of production of formic acid are very high. So we had made a demand to them. Now, being a government company, they have to follow a process. And at the end of the day, if things turn out positively, we would definitely be interested in that.
The other big factor that the street is looking forward to for FY19 is the Ecoforce JV. Currently, there is money being spent on taking out the hydrochloric acid. Now, in the coming year, whenever that gets commissioned, there's going to be a big delta over there.
Currently, we are paying a negative premium of anything between $50 to $80 on hydrochloric acid. And with the commissioning of this JV, definitely that will become a positive contribution. As far as the progress is concerned, we are planning to commission that plant towards the second half of 2019.
Well, Dr. Gupta, another big area has been the NEEM project. Last year you did around 40 crores odd. What's the vision there?
See, Honorable Prime Minister took a historical decision of 100% coating of NEEM urea, and we embarked on a massive backward and forward integration project just to fulfill that vision of Honorable Prime Minister by not only collecting neem seeds but producing neem oil, and not only producing neem oil to coat our urea but also to use that neem oil to produce various kinds of products. And right now, every fortnight, almost every fortnight, we have been adding one more product to our basket. This year our target had been about 40-50 crores, which we should reasonably achieve.
FY20, what kind of a number are you looking at?
This has a potential for achieving 500 crores turnover in next 3 years. So we are gradually increasing. Now we can't fix up any figures of 100 crores or 200 crores for one financial year. But definitely, once it picks up, it will pick up very fast.
You've been at the helm of JNFC for the last few years. If you could tell us your most satisfying experience out there.
From a company which was completely written off with the first ever and highest ever net loss of 450 crores, with almost 2,500 crores of assets, with time overrun and cost overruns, just lying idle, rusting, to something which we have achieved now, completely debt-free status, highest ever profits, highest ever dividend, highest ever bonus to our employees. Well, it has been a very, very satisfying journey.
And what kind of objectives you have going ahead?
Well, our objective has been multifolds. One is consistent reduction in costs, input costs and operational costs. Because our motto is that each rupee saved is a rupee earned. And by this, we have in the last 3-4 years almost achieved savings of 700 crores, which otherwise would not have been achieved, and that have gone into our balance sheet. Two is increasing operational efficiency with zero compromise on safety. Three, we are essentially a fertilizer company, so we never lose that focus.
We have heard the positives, but according to you, what would be the key risk to all these upsides that we're talking about?
In next 2 years' time, I don't see any risks in the market, in the demand segment, in the supply segment. Internationally, the entire sector has been doing very well. So I don't see major risks as far as the outside of the company is concerned.
All right, insightful chat out there with GNFC. In fact, just pull up the intraday chart of GNFC itself. While the management was talking, the street was listening. The stock is at the high point of the day. Three things really stood out for me, Nigel, from that chat. The first one is the fact that they've reduced their long-term debt to zero. Their working capital also has come down from 1,700 to just about sub 300 crore rupees. The second thing is their hydrochloric acid, for which they were paying a negative premium of close to around $80. That one's turned positive. And as an FMCG analyst, who says FMCG for life hashtag, I will definitely be watching out for their neem business, because the management says that this could be a potential revenue of 500 crores over the next few years. Two things that nearly needs to be watched out for. One, whether they do go ahead and achieve that 500 crore revenue. And secondly, the backbone for FMCG, distribution. From a chemical company going into a consumer company, what kind of distribution do they set up is something I'll be watching out for. But the street seems excited.
That's right. Q4 EPS was around 14 rupees. If you, even take it at around 45-50 rupees for the next year, then the stock is available a little less than around 8 times. So it's going to be interesting how things pan out. The stock, remember, has corrected a good bit from the top, but positive commentary coming in out there. But by the way, we have some more important news that's flashing for you on the screen. Mahindra & Mahindra, the exports numbers are up close to around 26%, but I think the tractor sales numbers as well were flashing for you, and that as well looked quite good, and that's why we did see a bit of a bounce there. The domestic sales have jumped up by around 10%, and I think we have more details on that front. So that explains why, in fact, we're seeing a bit of a spike. The total Mahindra tractor sales has jumped up by around 46%, and that's why we are seeing green on the screen, and that stock as well is moving up as we speak. And keep an eye out on GNFC. That stock has moved to the high point of the day. Remember, we had the management just speaking to us. It's moved now higher. It was sitting with a gain of around 4-5%. Now it's up close to around 7%. So keep an eye out on that stock. But as promised, the next stock on our radar is Huhtamaki PPL. Now that stock is in focus because they've done a bit of an acquisition. Their FY19 business outlook as well is going to be quite interesting. We have Mr. Suresh Gupta, the chairman of the company, who joins us. Hi, Mr. Gupta. Thanks so much, sir, for joining in. Well, I believe you're transferring one of your business on a slump sale basis. Just a few details we want to know. Are you getting any money for this transfer? And secondly, what kind of operational profit or loss was this business making?
Good morning, Nigel.
Morning.
We have acquired the company, Ajanta,
okay,
which is a leading company in pressure-sensitive labeling in India.
Okay.
And we've acquired it on a slump sale basis.
Okay,
you've acquired it on a slump sale basis.
And it's got an enterprise value of about 100 crores.
Okay.
So how are you?
The basic rationale for buying this company was that we are the leaders in both flexible packaging and labeling in India. And in labeling, we have a very wide, diverse number of technologies. In fact, it's amongst the widest range of technologies in the world. And in amongst these technologies, which includes shrink sleeves and wraparounds and in-mold labels, there is pressure sensitive, which is a major technology. And in pressure sensitive, we were the very clear outstanding leaders in pharmaceutical packaging, and we needed to take a strong position in fast-moving consumer goods. And Ajanta was one of the leading players in fast-moving consumer goods.
Mr. Gupta.
So with the acquisition, we have completed this sort of, you can say, a 360-degree circle of customers and technologies.
Right, Mr. Gupta. Thank you for explaining the rationale of this. Now, if you could give us a few numbers, 100 crores is what you've paid in terms of valuation for this. So where are you funding this from? Secondly, what kind of margins does this business enjoy, because you spoke about FMCG? And thirdly, what kind of scalability? Over the last 3 years, we've seen the revenue of this business grow from about 60 crores to about 81 crores. So how much more can you scale the revenues up by? So one, how have you financed this? Secondly, the margins. Third, the scalability of revenue.
The finance is from internal accruals.
Okay.
It's internal. So that was quite simple. And margins, let me say this, that the margin for this business is better than the average margin of our company today. It's a clear step up.
Okay.
Compared to the average margin of the company.
And the scalability?
The scalability is very good, because it synergizes beautifully with our other pressure sensitive factories.
Yeah.
This is going to end up with us having, we have a factory for pressure sensitive in Sikkim. We have a major factory. The mother plant is in Mumbai.
Okay.
We have one in Hyderabad, and now we have one in Parwanu in Himachal.
All right.
And now we will have Ajanta 2 factories in Daman as well as in Baddi.
Okay. Mr. Gupta, we are running short of time, sir, but given the kind of moves that you have taken, you're talking about facilities coming on stream, and your entire tone is sounding quite confident. So for 2019, 2018, 2019, you must be having a revenue target. You're saying that the businesses can be scaled up as well. So what kind of revenue can we look at? And margins of around 10% odd is what you're doing currently. Can we see a bit of an upscale in that? Can we do 11, 12%? Is that possible, or are you expected to hold at these levels, sir? Very quickly.
Okay, last year, as you know, we had total sales revenues of 2,100 crores.
Yes.
And we are expecting a growth, we are hoping and cautiously optimistic of a growth in double digits on that number.
Interesting.
And we are certainly looking at a step up in our margins.